All right, guys, so we're here. I'm sorry. I know I'm starting late. It is the crack of dawn here in Texas anyway. It is still 6:55 in the morning. Again, I'm starting late. I'm working on a video. It's a pretty slow day, man. I don't know if y'all have looked at the market today, but the market looks like total crap. You know, the market is incredibly boring. There's just not really anything going on. Not that I can see. If you guys see anything in markets that you like, let me know. I just don't see anything that looks good at all. Everything looks really slow. I also like I'm trading and stuff, but I also might have to work on a video a little bit more this morning. But we're here. The show must go on. If you guys want to see what I'm over here doing here, I am currently trading. Let me get some music playing, I guess. But I'm going to have to mute the music, just a fair warning. I'm probably going to have to mute the music at some point so I can finish this. What's up, team? All right, so you can see I'm currently in this trade right now. I'm down about 10 bucks. Kind of trying to attack the range, but like the market looks like total crap. Like it's so choppy and boring and neutral. There's just literally nothing going on. Like genuinely nothing going on. So maybe we'll get some like better volume. We had a green day yesterday. So we did have a green day yesterday. In both trading P&L as well as like broad market, like green. So S&P ended up green, the Q ended up green. Today would be our second day back since the holiday. The rest of the week's kind of busy. I'm getting ripped up on in my face here, and that's all right. We'll give it one more second. We're down 100 bucks. Well, I was about to cut it, and then it dipped down a little bit, but I'm probably going to cut this, yeah. I'll let it test this high and see if it rejects. I'm just looking to attack the chop, I guess. Again, the market's so slow. It's a combine account, so it's not the end of the world either way early this morning. Drinking my coffee. Hopefully you guys are doing good today. Yeah, sorry, I looked down. I'm gonna have to. Oh no, I just added to it. Oops. All right, so we just lost 160 bucks. It could be worse. I mean, that's actually a pretty small trade, all things considered. The market's just so choppy. And again, I don't really like taking range-bound trades like this because a lot of the time, again, stocks will just rip up in your face outside of that range. So again, we're just horsing around, having fun with it. And again, it's all good. We will see what we get now. Just switch this display capture to it. There we go. Alright, so let's see the stock market. I see Nvidia up nicely again today. Again, the Q slightly red, although it could be worse, I think, right? What kind of coffee? I don't even know what kind of coffee this is. Google's your friend there, pew pew, regarding long-term, short-term capital gains. One, long-term capital gains they take less of a percentage from it than short-term capital gains. But Google's your friend, sir, you know. Yeah, so I mean, just a quick Google search. Selling capital assets after owning it for 1 year or less is short term. It concludes basically any investment vehicle, stocks, bonds, gold, real estate. Short-term gains are taxed as ordinary income. Long-term capital gains are taxed between 0, 15, 20, depending on your income. So long-term gains generally taxed at a more favorable rate. Short-term gains do not benefit from any special tax rate. They are subject to taxation as ordinary income. Basically, you want me to put here's the easiest way to put this. All right. If I make, let's say, $200,000 a year, right? And I'm just throwing a number out there. I'm not saying I make that much or anything like that. I'm not going to be specific with how much I make, but let's just throw it out there and say I make $200,000 a year. Then let's say I make $5,000 trading stocks, day trading stocks, right? So short term, right? Like it's not long term, it's short term. Tax wise, they're just going to tax me like I made $205,000 that year, right? So it's not going to be like I'm not benefiting from long term tax breaks. You know, does that make sense? So like basically if you hold things long term, you get certain tax breaks depending on how long and how much you make and all that other stuff. Short term, you're gonna get, you know, taxed at a less favorable rate. Well, market's starting to churn up here. Here's the Q. Go green on the day. Very choppy open, but it is starting to go green on the day. That's nice. I'm going to say it. Well, I mean, that just means that you were pretty bearish, Nima. No offense to you. I appreciate your support here and you viewing my channel and everything like that. I really do. Honestly, I hear it all the time, though. Like, and again, in my personal subjective opinion, like it's wrong. All right, what I mean by that is like, look, a lot of the time, bearish traders, and again, I'm going to preface this with like, look, I'm not attacking you here. Like, please don't take this as like a personal attack, because I really hear this all the time, and it's all love. And maybe I'm wrong here, okay? Like maybe I'm wrong. I'm going to preface it with all this stuff because you know, maybe I'm wrong. With all that said and out the way, though, right? I hear this all the time, in which the market rips up, and people say, "Oh, well, this is nonsensical." You know, number one, maybe it could be nonsensical. I don't know. It might be nonsensical for all I know. You know what I mean? Maybe it is nonsensical. But I hear it a lot. People say, oh, this doesn't make sense. This is nonsensical. Right? Again, I disagree, and I'm going to show you why I disagree. And I've been saying this for years. Okay? I disagree because prior to this long, like, number one, there's a couple points to this argument. And I say this argument every day. Just so, and again, people are going to be like, oh, you're a broken record. I'm just telling you guys so you guys understand markets. Right? Because this is an important thing to understand. The first thing to understand that's almost always true is that the market is going to go up over time. You know what I mean? Like the market's going to go up over time. Like we're going to have good periods. We're going to have bad periods. We're going to have periods in which the market, you know, goes up really big. We're going to have periods in which the market falls down really fast. And that's normal. But the long-term direction of markets is up. It's going to go up. You know what I mean? It's an inevitable thing. The S&P 500, the NASDAQ, the Dow, they are going to increase over time. That's kind of the point of them. That's why so many people are interested in the stock market, because it's a way to hedge against long-term inflation losses. Now, again, like I say every time, that is almost always going to happen. And so if it's been years since we hit long-term lifetime highs like this on the Q, if it's been years since we've hit those levels, what does that mean? Like, what do you guys think that means? If it's been years since we hit long-term highs, right? In my opinion, what it means is that it's due for a retest of those highs, because natural direction of the market's going to go up. Very, very rarely does the market trend down for extended periods of time. It's just rare. We might have bearish years. We might have bullish years. Very rarely does the market ever trend down long-term. It just doesn't really happen like that. It's not something that's like very common. And so what I start to see whenever it's been years since we've tested or broken highs is it's due for a retest. You know what I mean? And so us rebounding from really big weakness that we had and finally starting to push up like this and test these highs. To be honest, it doesn't seem to me like we're like super incredibly extended on the upside. Maybe we are, but it doesn't look to me like we're just kind of in this completely nonsensical place. I think that the market's just pushing up because the market pushes up over time. And so, and again, the number I always tell people is the same thing, right? People hear the S&P 500 gives you 8 to 12% a year, and then when they hear we're up 20-something%, they're like, oh man, it must be too extended on the upside. This doesn't make sense, right? And this is up too much. But again, the saying that I always use here on the channel, which is incredibly important to understand, is that the market on average gives you 8 to 12%. But on good years, and that includes crashes, right? So that 8 to 12% number includes the statistics of crashes. So on good years in which the market is not bearishly trending, it's going to move up much, much more than 8 to 12% to compensate for the times that it crashed. That's a normal thing. I've been saying that like a broken clock, like a broken record over and over again. But it's true. And so when you get crazy good years like this year where we're up freaking 20-something%, understand the nature of it, which is that that's the natural flow of markets. Now, maybe we correct. I'm certainly thinking we could pull back or whatever. I think I think it's certainly possible we correct a little bit. I think corrections are normal as well. Crashes are normal as well, as long as you understand the long-term state of the market is probably to the upside. You know, crashes are relatively normal, I would say, outside of that. Like, markets crash. Markets go up, down, sideways, and they certainly crash. And so anyways, again, Nima, it's all love here. I appreciate, you know, the support and everything like that. And maybe you don't mean it like that. And again, maybe I'm just kind of biased because I hear a lot of people tell me, oh, the market doesn't make sense. The market doesn't make sense. I've been hearing people tell me that for 2 years now. And the question you have to ask yourself is, does the market ever make sense? I don't know. I know it goes up long term. The SQ? Yeah, I mean, that's the inverse Q, right? So, again, what I always say, Blaze, is the same thing, which is that simply that holding a short position long term is an incredibly risky bet in blue chip stocks. Incredibly risky bet. Incredibly risky bet long term is shorting blue chip companies, because I can hold a dip buy long term of a blue chip and probably make money on it. Eventually, it's probably going to come back in my direction. If I hold a short position long term, it's the opposite. The opposite is true. It's probably going to eventually lose more and more and more and more over time because of the nuance that I just talked about, which is that blue chip stocks go up long term. Most of them. Some of them don't. I mean, broad markets go up long term. You're going to have individual companies that fail, but that just has to do with price selection and company selection. Oh, sorry, I didn't see your donation. I've heard the S&P 4,800 to 6,000 by 2024. And your guess? I think that's probably, somewhat reasonable of a range for it. AD, I think that's probably pretty reasonable of a potential range for it, brother. But I don't know for sure. Of course, I'm just guessing as well. Nobody really knows here. But yeah, hey, thank you, Ramsey, for the $4 as well. I appreciate it. Thanks so much. But yeah, I mean, I think that's probably a pretty reasonable bet. I mean, again, we're right around 4,800 now. It just depends on whether the market turns this year, and it could certainly turn. It's not like we can't turn or we can't have bearish years. Yeah, I'm trying to look up. Oh. I was just hoping for a 3 to 5% pullback so that I can comfortably go long again. Don't really feel safe buying stocks that are going up vertically with ADR stocks. Yeah, I feel you. I get it. I understand. I really do. And I honestly, with that in mind, I kind of agree with you now. The thing, though, is that when is this momentum going to stop is the real question. I don't know. I don't know when the momentum is going to stop. I think that's what you got to ask yourself, is when is this momentum going to stop? And again, I really have no idea. Again, I really don't know. Right, exactly, Blaze. I see somebody saying stonks only go up, it is known. Well, I mean, that's a generalization of the truth, which is that long-term stocks are going to go up. They don't always go up, of course. And again, you're going to have individual stocks that fail. But it's really important for people to understand this nuance, because it's like, I think the biggest way traders get trapped in markets, and I see it happen to a lot of supposedly really smart people, where they find themselves betting against the broad markets long term, which is one of the worst bets you could ever do. It's one of the worst edges you could ever have in markets. Like, you're betting against the market long term. It's a sucker's bet. It's something that, you know, unless you get it for super cheap, then maybe it's valuable if you can, depending on the price you get it at. But man, the market has just been incredibly strong. Incredibly strong. Look at the Q rip. Over $1 flush in oil in the last 10 minutes. I'm a trader until the market crashes hard, then I'm an investor. I mean, I understand what you're saying, but investing, I mean, I'm okay. Like, it's hard to explain. I don't know if the best edge in investing is waiting for dips. You know, Warren Buffett talks about it a lot, where trying to time your entries for long-term investments is usually a bad move. That's going to be really difficult for you to like accomplish successfully. Most of the time he says just dollar cost average, right? What dollar cost averaging means is you make periodic purchases of shares with very specific time intervals, meaning like you buy 10 shares of Apple every 2 weeks, you know, or something like that, right? Or you can have any larger or smaller size that you want, but like buying 10 shares of Apple every couple weeks, like clockwork, and that should curb some of the volatility behind it, is what DCAing is, or dollar cost averaging. And the reason I say that is because I see people a lot where they're like, yeah, I'm waiting to buy on crashes. And I buy up stuff during crashes, but most of the time they're not investments. Like, most of the time, if I buy up something on a crash, I'm buying it up short term and maybe holding it for like 6 months and then cutting it and trying to make like 100% or whatever it is on that trade. And I guess some people might call that long term, but long term, most investors or traders are going to consider long term to be between like a year or two minimum. But again, everybody's kind of different, you know. It varies. All right, so we're still bouncing up some. John, today we have all report coming out. Do you think they are strong to influence markets? No, none of those are none of those are going to influence anything for the most part. I like gold as a long-term inflation hedge, but short-term, I really don't know. Yeah, I mean, I like buying extension Blaze, but it's also something in which, like, it depends on what it is. Like, I look for objective value, and I don't mind buying really weak stocks like other people want to do. Like, some of my favorite strategies, again, in 2020, I've said this many times before, but in 2020, man, I bought up a lot of discounts. Like, in 2020, I bought up United Airlines, I bought up MGM, I bought up Uber, I'm pretty sure, at like 40. Like, again, in 2020, I bought up a lot of these, like a lot of these. And so I ended up getting in Uber down here at the $15 level. I ended up getting in United Airlines. And again, I've said this 1,000 times because it really is true. But once this happened, people made fun of me when I bought these stocks up. Right? So I bought up United Airlines here right in the heat of like fear for airlines. When everybody was saying airlines were in trouble and all this stuff. And it was really when there's a lot of stuff going on with like security in airlines. I ended up buying it up because simply there was objective value. PE ratios were low, value was low to purchase into it. And again, I ended up making, like, I even made a video about it on my other channel. I ended up making a bunch really quickly. And then crickets from the people who acted like it was just a bad trade. So you got some people that are just naturally short biased. And I think, and that's fine. I'm okay with being naturally short biased. But when you let that pride of being, oh, I'm a short biased trader, you know, overpower logic, is when you find yourself in trouble. Again, I did this with UAL. I did it with MGM. I think MGM hit like $7 or something crazy cheap like that. Like MGM. Oh, MGM got down to $1 in 2009. That wasn't when I did it though. This was here. So yeah, this thing got down to 590s back in 2020. And again, I think I bought call options on this one if I remember correctly. But yeah, I think it just depends. I think when you have, again, I think the fearful when others are greedy, greedy when others are fearful mentality is like a useful mentality. You know what I mean? I think that type of mentality can be, you know, profitable. You just have to time it correctly, you know? Yeah, the NASDAQ's flying up right now if we look at it here. There's the NASDAQ. Question, what do you do for fun? I mean, I do a bunch of stuff, man. I'll play video games sometimes, especially with my kids. Lately, I've been playing a lot of video games. I do Brazilian Jiu-Jitsu, so I do Jiu-Jitsu for fun. I hang out with friends, you know. My parents who are in their 80s hold dividend-paying stocks, spending $50K a year in divvies. Yeah, but in order to really make $50,000 a year in dividends, Curtis, you're gonna need like $1 million. You know what I mean? Like realistically, maybe more than that. Yeah. Yeah, Carvana was crazy. So here, I'm gonna have to mute this background here because I am kind of working on something in the background here, so forgive me, guys. Make sure this is muted. 1.2 million spread over 20 dividend paying stocks. Yeah. When your financially illiterate friends start asking how to invest the rug pull. Yeah. And this is honestly surprisingly accurate because, again, an example I always use is Dogecoin, right? Dogecoin was at like 65 cents or whatever it is. Look at the NASDAQ testing 17.1K. So yeah, Dogecoin was at like 65 cents or whatever. My mom messaged me and she was like, yo, John, I'm thinking about buying Dogecoin. And I was like, I wouldn't do it, Mom. And then she didn't, and then Dogecoin ended up coming back down to like 8 cents. And so the pattern is that whenever people outside of markets come to you asking whether you should buy something, there's probably a bubble, right? Like that's typically the argument, is that whenever somebody outside of markets comes to you asking you whether you should buy something, it might be time to sell. Where's Nvidia at right now? I can look at Tesla too here. Tesla with a beautiful day, man. Look at the huge rip on Tesla. Wow. All right, team. I know there's no music. I'm kind of working on something in the background. It was never more true than during the crypto bull market. Everyone at work was all of a sudden into crypto. I should have known. Yeah. Good meta. What is gold now? Gold currently is, let's see. Look at the NASDAQ still ripping up pretty high here. Gold at 2080s right now. 2080s. So that's pretty impressive for gold. Alright, guys. So, yeah, we are... Oh, man. Getting ready here. Look at the NASDAQ just pop up. Again, we don't have any music because I'm kind of working on something in the background here, team. So y'all are just going to have to kind of deal with that. You'll be all right. And bear with me, team. Hold on. Okay, good. Whew. There we go. All right. So sorry, I had to figure something out here. All right, so we got a little pullback at gold. Again, I might be looking for a NASDAQ dip, but like, man, the NASDAQ was super choppy, and we were even trying to attack some of this range. We were trying to attack some of this range, and then it just ripped up. You know, you can. A lot of people like looking at the crossovers between the 200 EMA and the VWAP right there. You know, and so yeah, interesting range. Again, we'll see if it actually holds or not. But it's getting close. Google Oracle calls today. Yeah, what's the lifetime high on the NASDAQ here? I gotta look. Lifetime high is 17,111. So we're at 17,104. So we're actually getting pretty close to the lifetime highs here on the NASDAQ here. Getting very close to the lifetime highs. Again, the lifetime highs... Oh, wait. I'm sorry. Hold on. Yeah, we're very close to the lifetime highs on the NASDAQ here, guys. 111 is the lifetime high. And we are at 102 right now. So again, the lifetime high is here. We'll make it big and green so you guys can see it. That is the lifetime high right there. I'm pretty sure. Yeah, that's the lifetime high. So we'll see if the NASDAQ can break lifetime highs again this morning. Gold's still dipping down a little bit. My brother-in-law was asking me whether he should start buying Boeing. Yeah, I mean, Boeing is probably a healthy company long-term, but short-term, who knows what it's going to freaking do. I would reach out to them to be sure. I don't ever trade towards the closing bell, but I'm pretty sure you have to close it down for at least an hour. Your day trades for at least an hour. It's a day trading combine, so I'm pretty sure you got to close it down and let that work in that way. But again, I'm not 100%. I would reach out to them. All right, guys, almost done with this video. Almost done. Sorry, gotta get that out of the way. Oh yeah, I did get some trading done yesterday. I could probably use in this video. All right. Yeah, yesterday. Let's see, where was it? 26, 26. Yesterday's the 26th, right? Yes, it was. Okay, good. There's the day. I forgot about that. I got a lot of trading done there. All right, so just almost finished here, guys. I forgot, so this will make the video finish quick. Yeah, and in this video, y'all are going to want to check it out. We're going to debut it after today's. I see the gold dipping down, so gold now technically red on the day. NASDAQ still pushing pretty close to... still pushing pretty close to the lifetime highs here, team. Yeah, we're talking about our system here a little bit in this video. All right, so pushing up, trying to break 17,105. Almost done, guys. Google Oracle calls today. Nike. Do you think mid and small caps will grow faster than the S&P short term as small caps usually perform better in January? I think small caps are usually very bad investments. I don't know. I don't like small caps at all. I think most people know this. Like, I genuinely just dislike small caps. I think they're incredibly risky for new traders, and a lot of new traders just get stuck, like, investing in these really bad companies. You know, and just end up just losing a bunch. All right, almost done. TLRY, cannabis stock. Yeah, we're looking at NASDAQ futures and gold here. I'm also looking at, like, Tesla. All right. Let me save this, and then I'm basically done. For the crypto, Bitcoin Cash is also having its run up. Watching the E-mini break all-time highs feels like watching history in the making. Yeah. Where's the E-mini lifetime highs? Let's check it out. So here's the E-mini. We have 483, 450s as the lifetime highs. And so, yeah, we broke that right at the end of the day yesterday. NASDAQ's still trying to run up. I'm in GameStop as well. I'm green in it. I like that. Penny stocks will kill your account. Yeah, I mean, again, here's the pattern is very simple. The pattern is very simple. Most day traders end up bag holding penny stocks for too long. Basically, what happens is that day traders buy penny stocks, right? They get involved with kind of like the Tim Sykes warrior trading, like I can find financial freedom day trading penny stocks. And again, maybe you can. I'm not the best at it, of course. Maybe I just suck at day trading penny stocks. I don't know, but I think some of the marketing there is really sleazy. But yeah, most penny stock day traders end up doing this one mistake that just destroys their account. What they do is that they end up getting like sold. If you look at penny stocks, right, when you read the descriptions of some of the catalysts, some of the market moves, all that stuff, when you read the descriptions of some of these moves, you realize how kind of sensationalized this game is. Like the penny stock game, incredibly sensationalized. Everybody is pushing these really crappy companies and acting like they're just the next Amazon, like they're just about to be the shining beaker of success, and that they're somehow going to go from 30 cents a share all the way to $100 a share in the next few years, and that if you miss out on it, you're going to miss out on the greatest gains in the market, history, or whatever it is, right? That's what they sell traders. They say, hey, you're about to get rich if you trade these penny stocks, right? And so day traders end up trying to do it, and they get talked into buying and holding and bag holding. Like what happens most of the time, what happens is like this is the pattern. Day traders day trade penny stocks, right? They end up losing their butt day trading penny stocks. The penny stock just turns on them completely. They end up losing like 50%. And so then confirmation bias kicks in, and they're saying, oh man, I'm down 50%. I can't accept this loss. It's not a loss until I sell. And they start reading some of the nonsense marketing about these penny stocks, right? And then somehow they get kind of talked into being long-term investors of these penny stocks. And these penny stock companies are horrible. Like they'll put out this marketing, but none of it's really true. Most of them will fail. Most of them will get delisted and just be bankrupt companies. But for whatever reason, like they get talked into holding these stocks long-term. And then they turn into like long-term supporters of these penny stock companies. They'll start sitting on them for years. They'll start joining the investor chat. They'll start joining the groups on social media. And a lot of the time, these penny stocks will have these large followings around them because everybody else is kind of in the same situation. They bought it, lost big, and now they're desperate to make their money back. So you got these big groups of traders who are now kind of sitting around patting each other on the back saying, hey, what a great penny stock this is. And then eventually the company fails. Inevitably, the company's going to fail eventually. And then usually instead of being like, man, I got talked into buying a dumb trade, dumb stock, what was I thinking? They instead all of a sudden find some way to make it like manipulation, like, oh, this stock would have succeeded if it wasn't for manipulation or whatever it is. That's the pattern. It happens so much. I see it so much with not just people in my community, but people in other communities as well. It's just something that is like clockwork. Penny stock day traders turn into long-term investors, and then scream manipulation or whatever it is when their company that was never going to succeed doesn't succeed. It's just very common. Sorry for the rant, but it's just true. All right, I think I'm basically done with this video. I gotta add a couple more things, but I'll go ahead and unmute the music for you guys so you guys can jam out with me. There's no bull market, only US dollar losing the purchasing power. I mean, I get people who are like, oh, well, you know, this market's not really bullish. You know, they'll say this market's not really bullish. You know, inflation takes these gains away. But again, that comes from a fundamental misunderstanding about what the stock market is, sir. What the stock market actually is an inflation hedge. That's the goal of it. That's the point of it. Comparing it to inflation can be useful and all that. But the whole point of the market is to hedge against inflation. So, you know, that's the point of it. That's what the point has always been of investing in the stock market or gold or real estate or, you know, silver, you know, whatever it is. It's all inflation hedges. That's what we're doing, is trying to hedge against, you know, the devaluing of our dollars. That's the point of it, you know. Today's volume is worse than yesterday. Yeah, it really is. Yeah, we still do the crypto show. I don't do pre-market only. We trade after the opening bell. Yeah, so we trade everything. I'm going to be on Top Step TV at 11 today. All right, guys. So the NASDAQ is now pulled back to. So the NASDAQ is now pulled back to 1795. I kind of want to buy this. Should I buy this? I don't know. It looks solid. I kind of want to buy this dip. Again, I'm not telling you to buy it. I have no idea what I'm talking about. I might be wildly wrong about everything I say. But I'm thinking about buying this dip short term. What do you guys think? Is it a dip buy? Yes or no? Again, do not copy me. I have no idea what I'm talking about. Don't copy me. But I'm thinking about buying this dip. Let me know if you guys think it's a good move or not. We'll see. You know what? We're going to go ahead and take this dip. All right, we're going to go ahead and take this dip. Definitely the top 5 biggest dips, dippiest dips I've ever seen. We're going to go ahead and buy that up. We got one contract here. We're buying up the NASDAQ 100. One contract. So we're up about $10. Probably just gonna scalp it and build up that cushion like I always try to do. We just made about $40 pretty quickly, so I guess that little dip buy worked. We'll take it. You get that dip buy intuition, you know. All right, again, I'm gonna have to mute the music real quick. Bear with me, team. Pun intended, I guess. There, so we muted the music. There we go. We needed some pictures of some profit graphs here. What are we up today? Let's see. No, we want to do today. No, nothing today. Let's try this one. I think we're up like, yeah, we're up like 85 bucks. We're up like $85. Hey, I'll take this green. You know. You know, $85 is better than zero. We're starting to push back up on the NASDAQ. The dip worked, guys. Listen, I'm not saying I'm the greatest ever, but, like, the dip worked, okay? Again, what a lot of my trading system is actually very simple. It's identifying a really strong trend and then waiting for a decent pullback and buying that dip. Again, it's surprising how effective that basic, like, small little simple strategy can be. But, again, it can genuinely work. You just got to... not overcomplicated. I think I see a lot of people with all these crazy charts and stuff, but a lot of trading is just too complicated. All right, guys. All right, so again, we are pushing up to 17,105, 17,111. 17,111 is the lifetime highs. All right, team. All right, almost done here. Let me see this. All right, so we're testing the highs of the day again on the NASDAQ. All right, so NASDAQ still pushing, trying to break highs. 1705 is the high. E-mini still trying up there. All right. This should work. Let's see. All right, let's clip that. Let's clip this out the way. There we go. All right. All right, guys. So 17,103, 17,104 is still pushing up. Let's see what NVIDIA is doing here. We're going to get ready to unmute the mic as well. NVIDIA, man, with a really strong day. Tesla, guys, had a crazy big day today. And again, if this weekend's green, it'll be our 9th green week in a row. Tesla just broke highs. That's one of the reasons it looks like the NASDAQ just broke the highs of the day again. So, yeah, we'll see if it continues. But... all right, team. I'm going to title this, Watch Us Lose Money on YouTube. Hey. What about the spacing here? I wish I could make this a little bit smaller, but I guess I can. Yeah, we'll have fun with that. All right. Look at the NASDAQ still pushing up. Tesla up to 258.40s here. All right, team. Hope it's all going good. I was up in pre-market, but gave a lot back. Ran over by this parabolic ascent. We are range bound for so long. How many ticks max stop loss for NASDAQ? One contract. I mean, that's too broad of a question, bro. I mean, it's up to you, man. Here, are you trying to send people to WhatsApp, Kratos? If you are, you're going to get banned in the heartbeat. Costco dropping. Check out Celsius starting to break out. Bro, Celsius has so much caffeine on it, though, man. Like, so much caffeine. All right, so I think this is pretty good. Is it NASDAQ? What is? Is Microsoft still under pressure? Let's take a look. So Tesla, great day. I'm assuming Microsoft is probably up with tech, but it's actually not moving that much. Apple currently is slightly red, believe it or not. The Dixie's trying to reverse. Oh, WhatsApp? Does WhatsApp actually have a symbol? Does WhatsApp actually have a symbol? All right, I got to figure out. There it is. There's the music. Okay. All right, so look at the NASDAQ with a very large pullback. NASDAQ with a very large pullback. Apple dipping down under 193s here as well. All right, let me get this out the way. There we go. All right. Dixie's trying to reverse. Yo, bro, today I booked $30 thanks to Santa Rally. Hey, nice. Kratos. Money printing gives illusion of growth in markets. Yeah, I know quantitative easing has caused a lot of luxury stuff to increase. Even watches. Like, I've been kind of getting into watches lately. And again, people are always like, hey, don't buy the market, the watch market. The watch market is crashing. But honestly, that's kind of going back to where I said I bought MGM, where I bought, where I bought MGM, where I bought United Airlines, where I bought Uber. Honestly, here's the last year of luxury watches. Like, here's the last year of luxury watches. That's the last year. And so I don't understand the watch market really like that, like other people might. But it seems like it's time to dip by this thing and maybe ride it back up. And maybe it's starting to stabilize a little bit too and go back up some. So again, maybe it continues. I really have no idea. But what do you guys think? Close my NASDAQ short. Minus 40. Don't like this all-time high-ish. Scares me. Too much volume on the mic. Is the volume too loud on the mic, guys? Let me know. I can push it away from me. So again, we can just push it away like this. It's pretty simple. I mean, we can just push it away. Not too big of a deal, I think, right? Let me know if it's too loud, guys. Again, I know the music's not playing in the background, and so it might be a little bit different. It's good. It's fine. They will change the name to WhatsApp next. Yeah. Mic sounds fine. If you get a watch or two, make sure you like it in case you get stuck with it. Yeah, for sure. Yeah, the watch I'm currently looking at right now is I want this watch right here. I'm gonna show you guys the watch I want. Oh, dang, bro. Honestly, I didn't realize this watch was this expensive. Okay, no, I like this watch. This watch isn't that bad. This is the watch I'm trying to look at right now. Right, so it's the Saints black and gold Rolex. Right, it's about 12,500, 12.5K, but this is the watch I kind of want. That's probably the watch I'm gonna get if I get one, because it's kind of Saints, even though the Saints suck right now. But yeah, that's what I'm looking at right now. And again, I'll probably sell it if I can make a couple $1,000s from it. I'm talking to an AD right now about it, but again, I'm kind of learning the market. The only risk I think right now, in terms of that type of investment, the only risk right now with that is, okay, so if smartwatches continue to take off, the luxury market brand might go down. Is like logic in my head, but I'm not sure if it's the correct logic, but it makes sense. It seems plausible that like smartwatches take off, get better and better and better. Eventually you're going to be able to watch like Netflix on your watch. And then once you can do that, I would imagine the luxury market might fall. And again, if that logic is wrong, tell me how. It's all speculation, of course, but if that logic is wrong, tell me how. That's the logic that makes sense in my head for it. But again, maybe I'm wrong. I don't know. Unless it's a Patek. Bro, Pateks are like 120K, bro. I'm good. I do have a smartwatch. You know, I've got the Samsung smartwatch. You know, I got a bunch of sleep last night. I got 7.5 hours of sleep. I guess that's pretty good. Gold is moving up a little bit. Yeah, look at Apple fall. I'm worried Apple might drag the NASDAQ down. Again, here's Tesla. You're wrong, John. Look at the muscle car market. Yeah, but I think watches and muscle cars are a little different, you know. But I understand the argument. I do understand the argument. Because phones exist, it won't happen. Maybe. All right, so it's almost 8 o'clock. Big put entry, maybe. All right, so again, we're sideways on the NASDAQ. Tesla in a nice little pullback zone. Part of me wants to buy this dip again, and the last time worked, but I'm still a little nervous about it. You know, still a little nervous about it. Again, this pullback looks a little bit worse because we've basically been confirming sideways action. So, I don't know. Because phones exist, it won't happen. That makes sense. Maybe they will always remain two different things. I hope so. SPY at VWAP in the 20 EMA. Yeah, I mean, everything's kind of around lifetime highs today. They're close. They're close, but yeah. SPY look weakness, low volume pre-market, not the same last time. Rolex smartwatch. Maybe they'll come out with one, but I think it would kind of get rid of the point. I do think that there's a difference between like a regular luxury watch and like a smartwatch. I think real watches look better. You know, I think real watches look better, especially if it's gold or silver, you know, and I know you can buy like bands for these, but I don't know. I think that's the biggest risk to those markets is that over time smartwatches become more and more useful, more and more beneficial, more and more capable of things, and that diminishes the luxury watch market prices. And again, if you look at, again, just to pull up like watch prices over time, just to pull up the watch market here, like look, my internet's running slow. But look, here's the last 6 months. We are down 8% in the last 6 months. We are down 14% year to date. Last 3 years, though, we're still up 10%. And so it's like we had this big run up. Again, when the quantitative easing started, right? When quantitative easing started, all right. But yeah, again, I talked about this before, and this is like interesting look at the economy over the last few years. But specifically, luxury goods. You know, the richest man in the world is Bernard Arnault. Right now, he's the richest man in the world. Again, his name is Bernard Arnault. He's the owner of LV and a bunch of other stuff. To be honest, he again is now the richest man in the world. Let me make sure. Yeah, Bernard Arnault is now the richest man in the world, and with that, one of the reasons that happened is because in 2020, you know, we had the pandemic, and then we had quantitative easing with money printing and basically stimulus checks. From those stimulus checks, a lot of people spent their money on luxury goods, which actually raised the prices of these luxury goods to a point in which, you know, obviously if you look at the watch market, we had this crazy big increase around 2021 and 2022 after when, you know, as these stimulus checks were coming out. You know, you can see the big spikes. Everybody's at home. Everybody isn't working. Everybody's getting checks. And so, of course, these markets just go up dramatically from all of this stuff. And now that we're kind of back to business as usual here, you know what I mean? Now that we're back to business as usual here, you kind of see big corrections in those markets back down to, you know, back down to where they were. You know, still up about 10% relative from where we were before any of this stuff, but it is an interesting nuance of like prices and inflation and quantitative easing, and, you know, the overall effects of all this stuff on the economy. All right, so we are done with our video. I can now unmute it and actually put on some music here, team. I know some people were probably complaining, but hey, we are back here. Yeah, it's called an automatic, Curtis. If it basically your wrist's movement cause it to always work, basically as long as you're moving. It's called an automatic. I've got one somewhere around here. Dang, E-mini pulling back to view up, and NASDAQ still around 100. Yeah, I mean, we got a big pullback here. I see Tesla dipping, right? Tesla dipping. We're gonna get ready to maybe trade a little bit more here. You don't talk about small cap index trading, Russell. I've made tons in the last month or so on that. I still see a lot of scope here. What are your thoughts? I don't really find, I can't really find much edge doing it. Do you think Blink could rally again today? I have no idea whether Blink charging is going to rally. Don't know enough about it, to be honest, personally. And so I think anything could happen, but I really don't know. Genuinely don't know. Okay, got that up. There we go. Yeah, Bernard, I'll know now the richest man in the world basically from the quantitative easing that went on in 2020 plus. That's kind of what happened. My sister bought my parents 2 Rolex watches 20 years ago. They put them both in a safe deposit and never wore them. They were not into flashy jewelry. They stuck to Timex. Yeah, I mean, if I buy one, I'm never wearing it. Like, I would buy, like, I probably am going to have to pay a couple $1,000 premium to buy it. Because I don't know watches enough to go to, like, an unauthorized dealer, you know, where I could probably save a couple thousand from it. You know what I mean? So I'm going to go to Rolex themselves, which is a different thing. So, yeah. I read an article about him using hostile takeover tactics on Gucci. Interesting stuff. Yeah, if you don't know what a hostile takeover is, I'm sure a lot of people have heard that before. What that actually is when somebody goes along and buys up all the majority shares of a company, of a publicly traded company, and basically takes over that company by buying up all the shares of that company. You know what I mean? In that way, and even when they might not want to, you know, give up decision-making ability to them, you know, that's kind of what it is. Just to give you the technical definition, hostile takeover type of acquisition where a company, the acquirer, takes control of another company without the approval or consent of the company's board of directors. In other words, the target company's management is not in favor of the takeover, hence the term hostile. Yeah. But I mean, when you're public, you know. I don't know how it works in a private company. What should max loss for top step 50K account take? Anyone taking a day when you stop trading on a 50K? I'm not sure. That's a purely subjective thing, Ganesh. Purely subjective thing, brother. I use a couple $100 though, maybe $200 to $300. And again, we actually have a pretty good video on this coming out today, on how to get funded in a couple days. What? Dude, they're not letting me. Did I say, bro? I guess they'll let me use this one. Let me cancel that. Alright, team. Yeah, this is the music everybody always talks about. Alright, so again, we're kind of sideways again, man. The market looked better earlier, but... fix this. Broke, maybe. Alright. We're going to get ready to day trade at the open too, so bear with me team a little bit here if you can. Alright, so we did get a bounce up, man. I should have bought this dip, to be honest, man. I really should have. Should have bought this dip. Look at the Tesla bounce right at that volume weighted average price level. That's kind of like my go-to as well, unfortunately. Should have taken that dip. All right, so again, the NASDAQ testing that high again. Remember, the NASDAQ lifetime high is 17,111. 17,111. Sorry, guys. I know we gotta keep brights keep going on the screen here. I'm trying to fix something. There we go. That's better. Here's a little mini pullback here. I might buy this little baby dip here. Let me make sure I'm in the right account. Okay, yeah. We're gonna buy this little baby pullback. We're right around the top of the range. If we do make another test for that level here, we can maybe get into some good stuff. This is the regular NASDAQ, so we're gonna take one contract here, and then yeah, see if we get a nice little pop. It's kind of flat here still. Alright, so we're still kind of flat. I might add a little bit more to this since we have a cushion on the day on this one already. Alright, so we got two contracts, but we're still pretty close to break even. We're down 35. Again, we do have a small cushion already. down 65 bucks. It could honestly be worse. It's not like a couple $100, so I guess that's good. And now we're down 100 bucks. I'll probably cut this now. We're pretty close to break even. Again, the goal is to build up a cushion. If we lose, we're back down to break even. And now we're bouncing back up a little bit. So we're right around, you know, right around time to cut it, but I guess we're going to sit. All right, now we're back up to only $55 here. Alright, so now we're green about 2 contracts. I want to let it work a little bit more. I think we got a potential to let it bounce up some more. So we're just going to let this work some more and see if we get a nice little bounce. We're about $55. I'm going to pull it back a little bit. We got some room though. All right, now we're basically back and forth, break even and losing. Going back to green. All right, opening bell's at about 12 minutes. It's kind of slow right now, honestly. There's not a lot of economic reports. Kind of boring, and that's all right. What the heck just went on? Oh my goodness, I clicked the wrong thing. All right. All right, so we're back to red here. Again, I'm trying maybe being a little bit greedy. What I see is higher lows on the bottom chart. Higher lows. I think we might be able to push. So now we're dipping down a little bit too. Again, if we put in a higher low here, I think it's a much better look. Now we're back up to closely red. I'm watching Tesla here because Tesla was the original one that was kind of starting to pop off that looked good. It kind of just faded though. If we look at Tesla chart, it faded down and then bounced at the VWAP here, and we're kind of going back and forth between break even and green and all that stuff. Watch out, trading day, it could be tricky. Yeah, it's not really the computer, it's my kind of mistakes. Yeah, Harry, I'm not sure what you mean there, brother. If you're short on a stock and you have to pay a divvy. Just do the opposite of John. He's setting a trap. Yeah, I mean, listen, guys, I have no idea what I'm talking about. If you want to watch me lose money day trading, you know, tune in. Hit the subscribe button, guys. That's what we do here, too. I mean, we're great on the day, but, like, we might lose. Maybe we suck. It's all good. Liquidity dried up fast. Yeah, we just don't have any market data today. It's boring. Yeah, we're getting higher lows, which I think looks good. But also, it's something that I might take profit pretty quickly here. I don't want to hold this through the opening bell, and so we're up a little bit now. I'll probably take profit here. There we go. Almost. We almost were there. The liquidity is getting pretty boring here, though, man. Part of me wants to limit risk just to protect the trade, but also, again, I think we could get a little pop still, too. I don't know. Now we're red again. Again, I'm not going to hold this through the opening bell. That's too much risk. We got 7.5 minutes left for it. So we've been in this trade for longer than normal. Yeah, we're kind of flat right now. We are putting in higher lows, though. I do see like a little bit of a flag, but flags don't necessarily have to break to the upside. I would love them to, but, you know. Still flat. Tesla's starting to move up a little bit. We'll see if that holds. Back down again. We're kind of going back and forth. I'm not going to hold this through the opening bell though in like 5.5 minutes. Just too risky. Yeah. We break under this low, I'll cut it. We tried to give it time. We're just so choppy right now. It's probably not the best move. We're just going to cut it right there. It's just too choppy. There's just not enough. There's not enough going on. SoFi over 10. Hey, we'll see. All right, guys, so again, I haven't done any plugs today. If you want to check out Top Step, which is a funded program in futures, which is what I'm on right now. Yesterday, we made this much. And so again, yesterday we made this much, about $1,600 gross. We ended up making about $1,450 net, which is not that bad, which means that we did it with relatively cheap commissions, right? This is what we made yesterday. Again, 6.25 to 1 win-loss ratio yesterday. I'm definitely happy with that. I'll take that. We are also going to get ready to try again today. Tesla. Yeah, Tesla at 258. Anything else moving? I don't know. I don't see anything. Let me exit out of some of this stuff. Did I not save? I think I gotta refresh this. There we go. Center rally is on full throttle. Yeah, I mean, we're up a little bit today. It's not like crazy green though. Here's the NASDAQ. The previous closing price is right here. So we're not like crazy green or anything like that. We're just not. But yeah, if you want to check out Top Step, funded account program and futures, they give you a demo. They test your skill. If you could pass the test, they fund you. If you fail, again, I always do every plug, which is a shameless plug. Of course, they're a sponsor of mine. I'm certainly biased in their favor, but it's shameless nonetheless. Any plug I do here, I always tell people the same thing. Listen, almost all day traders lose money. It's not really an arguable thing. Almost all day traders lose money, especially new traders, right? Looks like me cutting that trade was the right move, especially new traders. And so in the end, as a day trader, you can either put up thousands of dollars yourself and most likely lose that. Like, let's just be real here for a second. You can put up thousands yourself and most likely lose that. It's not arguable. You're most likely going to lose the money you put up, especially if you're brand new. Or you could try a funded account program. In futures, I can day trade essentially the Q. The QQQ is the same price action as the NASDAQ that y'all see on screen. If I pull up the QQQ, it's going to look exactly the same. You can see this top right chart as this right here. Of course, these two are the same charts. They're different prices, of course, but they're the same charts. I can day trade this left side, no PDT rule in futures. Day trade short, I can day trade essentially the SPY as well. Patterns are very similar to blue chips, but there's no PDT rule. I can day trade short, all that good stuff. What Top Step does is they test your skill in a challenge that's cheap. And so they give you a demo account on Top Step. The base one's 50K. It's only 50 bucks. If you can hit the profit target, which is on the base one is 3K without losing 2K, they fund you 50K with a 90% split. And this is a company that pays out millions, funds thousands of traders every year, pays out millions in actual withdrawals. They're the most legit one in the world. And it creates this situation for new traders specifically where it saves them money. Because again, you can put up thousands of dollars yourself and probably lose that. Or you could try this out. You still have some pressure to succeed, so it's not like you're just numb to it like a regular paper trading account. You want to get funded, but if you lose, you're out 50 bucks instead of thousands like most new traders do. It's just a unique situation that makes a lot of sense if you're trying to conserve your accounts and your equity and your money. And then once you start getting good enough to where you can pass Top Step accounts and build up profit, then you can try to put up your own money if you want, or you could just trade on Top Step. And once you're funded, you get a 90% split. And so once you're funded, you get a 90% split anyway. And so it's kind of the best of both worlds. Although again, I have no idea what I'm talking about. They're a sponsor of mine, and so I'm definitely biased in their favor because they pay me money. But if you want to check them out, great way to help support the channel. Again, we're completely free. We don't charge for anything here in terms of content, so you're not going to get any exclusive paid content here. It's all going to be free. And if you want to help support stuff like that, there's the link you can do it on. Yeah, whole market's starting to pull back a little bit. Again, the NASDAQ's still technically green. You can see the Q here on the top right. There's the opening bell. There's the open. Quick little bounce at the opening bell. I'm going to wait for something to happen here first. we're now ripping up. Look at Tesla rip up. So it might have been just an opening fake out. Huge rip, almost breaking over the screen here, guys, on the NASDAQ at the opening bell. Wow. 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 What a rip. I mean, honestly, it's not that big of a rip, but man, it broke well over the lifetime highs here on the NASDAQ really, really quickly here. Pretty sure it did. Yeah, it broke well over the lifetime highs on the NASDAQ. I'm pretty sure it did the same thing. Let's see the E-mini here. E-mini's not even reacting the same, but the NASDAQ broke lifetime highs. I'm going to buy this dip quickly here, short. It's pretty close to the opening bell, but we just broke lifetime highs, and so sometimes those high levels are like a magnet, and that might get us an opportunity to ride this up some. We'll see. We got one contract here. We are down on it. I think it's worth the risk even if we lose. There we go, retracing. Again, we broke lifetime highs. We're still underneath those lifetime highs though, so that's not the best sign. Kind of flat here on this position now. We're right around that lifetime high level again. Very weird. Yeah, we're gonna have to cut it now, so we just got out, man. What a weird price action day, man. Market rips up. The E-mini, the S&P 500 E-mini is actually completely different. I don't really trade the Dow that much. I want to look at the Dow now too. And I'm assuming the Dow is at YMH4, no? Yeah, Dow's YMH4, and it's ripping up too, man. It's just weird, weird, weird price action. Look at the Dow, pop. I mean, I'm gonna try this again. And maybe I'm just gonna get punished again, but again, we made $1,500 yesterday, so we lose a couple $100. I think we're gonna be all right, but man, we got greedy and jumped right back in it because I thought a fake out was there. All right, now we're right at that previous lifetime high, and so let's see if it acts as resistance or support. Hopefully it acts as support if we can break over it and not resistance, but all right, we're green, pushing up 70, 80. All right, so we just made about $100 back, and we're also testing towards the high, so we did end up running. I should have held in it. That was just a quick little fake out, it looks like. There we go. So we got this little dip. I actually like this little pullback here. I love these little secondary pullbacks that you get after like big green candle follow through. It's kind of like piggybacking off of a much larger move sometimes. All right, so we're flat. We got a lot of down wicks here. I like the strategy still, though. There we go. Just made another 70 bucks there on that one. Okay. We're testing highs again now. If we get another little dip, I will buy this up. Didn't really like that. I got a little bit of cushion here on the day, so we're gonna add to that. Take 2 contracts now because we can. Might have to give it some time to rip back up though. Pulling back to that previous lifetime high, and so I'm just assuming that we're gonna hold support there, and we have. Scared sellers jumping out. I don't want to get spooked out yet though. Maybe those were the right moves. I'm gonna take one off of this and limit my risk there and just protect the trade a little bit. That way, if we don't hold, it's not gonna be a huge loss here, because I do see us turning down, and it looks like it was the right move. Yeah, I don't like this. We broke underneath the previous high, and so I'm just gonna chill with this. I don't want to take too crazy of risks. You know, we're also looking at the Dow. As the turnaround starts to happen. E-mini starting to move up. Dow actually ripped up and tested highs here, although the NASDAQ's starting to turn back around. It might be a nice little dip buy here, but we're kind of flat on the day with all of this stuff, so. Let's see what my chat room is doing. Apple showing spunk. Yeah, I wouldn't try to just have it replace your full-time job, Stinger. I mean, usually that's a terrible idea from rookie traders that end up just kind of gambling away and then getting frustrated they ever tried it to begin with. Again, I do see that happen very often in trading. It is something in which, like, I'm going to buy this dip. It is something in which, like, okay, most new traders should not be going super hard in the market. Like, if you're trying to literally come in here and make 65K a year from trading right off the bat, you're thinking about it from a very rookie perspective, I guess is the easiest way to put it. Most day traders lose money, so your goal in the beginning should not be to completely replace your job. Your goal in the beginning should be to close profitable. You know, if you jump in trying to recreate your job, you're just going to lose money. Same thing for people saying, hey, should I get a loan for trading? Absolutely not. You should never do it. If you can't afford it yourself, don't trade. And same thing, if you're not going to come in and replace your job unless you're taking crazy big gambles that aren't sustainable, brother. So. Yeah, the NASDAQ broke lifetime highs. It's starting to pop back up, it looks like, a little bit here. We'll see if it continues back up. Slightly green. Don't quit your job. Do not listen to a different person. Just seems like a horrible idea. Market's too choppy right now. We're going to slow down. Yeah, I would just try to be profitable, bro. Again, trying to replace your full-time job is just, it's almost certainly not going to happen, and you're just going to end up losing way more than you should. No offense. I mean, I'm being real. Yeah, while you might be being sarcastic, different person, please don't give them terrible advice like that, man. Friendly warning, brother. Just don't tell traders to do that. It's a horrible idea. All right, we're actually scalping the Dow right now here. You can see we're up about 115. We'll take that off here. Up about 50, 60, 70, $80 on the last little bit. We'll go ahead and take that off. Kind of flat day trading. We got made a little bit on the Dow, lost a little bit on the NASDAQ, which is kind of very choppy. NASDAQ slowed down a lot since the opening. Now the Dow's actually ran a little bit better here if we look at it. So here is the Dow that we're going to be pivoting to instead of the NASDAQ here, because the Dow's been treating me a little bit better. Here's the Dow. And the Dow ripping up, breaking highs. NASDAQ just basically super slow. Man, dude, I almost feel worse today than I felt yesterday, man. I wonder why that is, dude. Yesterday I felt much better. I was able to like get around and move. Today I feel noticeably worse. Right, exactly, coin. Try a funded account program. If you can't pass that, then don't put up real money and just yeah. E-mini's still trying. Yeah, we're scalping a little bit more now on the NASDAQ here. We bought the dip. Might add to this one. Didn't have time to. Wanted to. Here, it's all right. We'll go ahead and take that off. So we're green on the day now. Slightly green, but green nonetheless. I wanted to add to it, but we just didn't have time to. I could have added on the big bounce, but... Yeah, quitting your job early. Here's what I mean, if you want a path to that, this is what I would do. Personally, this is what I would do. I would take money from my job as needed and start other businesses with that money. Whatever businesses you like, figure out what you're passionate about, right? If you're passionate about trading, you could start a trading business, that's fine. Streaming, if you're going to try to just copy my trading channel or whatever, it's going to be kind of difficult. It's really saturated. But figure out what you're passionate about outside of trading maybe and start a business about it. Regardless, you can start a social media page, you can start whatever you want to do, whatever you're interested in. Monetize that. That'll give you the motivation to continue doing it, in which eventually you should start earning more money from it if you put your time and effort into it while you're working, right? That should eventually replace your current job, And maybe you don't even need to replace it. Maybe you do both, right? That should bring in enough disposable income towards trading, and that's when you can really start to trade freely and without worry. We tried to buy the dip, didn't really get the entry that we wanted. So we're not going to add any more to it. That's what I would personally do if I had to start over. I'd figure out what I'm passionate about, start a business around that of some sort. Hopefully that'll eventually replace my job that I currently have, and then, you know, whatever. Then I'll have disposable income. Easier said than done. Yeah, we just lost again. We're going back and forth, up and down $100 on the day. So, again, the NASDAQ's just crappy. Not really any edge here. The Dow got a little pullback zone. Maybe we can buy that, but... yeah, I mean, Carl... I don't know if you really understand how much money can be made streaming. I really don't. I don't know if people understand it. Like, I make... I'm not going to be specific. People try to kind of talk me into it. I'm not going to be specific. I make 6 figures doing this. Again, I'm not going to be too specific, though. But of course, I mean, we're on the internet. Everybody makes $1 million plus. You know what I mean? In their sleep right now, you know? Oh, I missed what you were saying. Yeah, you make a decent amount streaming for sure. My dream is to stream poker content, though. I love poker. My dream was always to stream poker content. I just don't have the time to do it. I have the money to do it, where I could enter some high stakes tourneys. I just don't have the time now, unfortunately. Oh yeah, a lot of YouTubers make over $1 million a year for sure. I mean, that's not a crazy high number for YouTube's, like, as well. Like, what people have to understand about YouTube is that it's not just what YouTube pays you; it's everything else. It's your brand in general, right? So it's your full brand. And like, when you look at the reach and the multiple income sources of that brand, it adds up very quickly. A lot of people don't understand. Yeah, I'm not selling a course. I'm completely biased in their favorite line down to a T. Hey. I mean, wouldn't you prefer somebody like me telling you that, though? Like, would you rather me act like it wouldn't, aren't you appreciative of that? Like, y'all should appreciate that. Because I'm telling you, I'm biased. They're a sponsor of mine. Like, imagine you saw, like, those late night infomercials selling you that under eye cream or whatever. And imagine the celebrity, you know, the B-list celebrity comes along and he's like, hey, I'm super biased in this eye cream's favor because they pay me money. You know, it's just rare. Y'all should appreciate it. Bro, I am tired all the time, dude. Of course I'm tired all the time. I got 2 kids. My son hasn't been in school. So you better believe I'm tired, sir. The NASDAQ is so flat right now. It's so boring. Nothing's going on right now, unfortunately. Look at the Dow rip. I mean, you also have to understand, I'm getting up at freaking 5 a.m. most of the time. So most of the time I'm getting up like before the crack of dawn to stream. I mean, it's a strategy, like it works because everybody else is sleeping. But, you know. All right. I'm going to mute the music for a second. I got to check one thing here, team, so bear with me if you can. Let me see. Let me schedule this real quick, too. NASDAQ finally looking a little bit better. What time is it? Hopefully it has. There we go. All right. All right, so we are up a little bit today. We're up like over 100. We've been scalping the NASDAQ. The Dow is what I should be trading, though. Look at the NASDAQ trying to go back up over that lifetime high. They're both technically green on the day. Also, we're going to throw this thing in sub-only mode. So if you haven't already, you know, subscribe. You know you want to. Hit the announce yourself. Show us you're subscribed. We appreciate it. There we go. And there we go. NASDAQ's starting to finally climb its way back up, but it's taken a long time. I got too many monitors. Do you guys buy the dip on Blink? Probably not. Hey, what's up, Jonathan? Hey, thank you, Jan. Raul, my guy, what's up, dude? Taxes must be complicated. Not really. Shorting Apple at 191. Look at the Dow rip. Look at the NASDAQ rip. Hardware? What do you mean hardware? Like my computer? I mean, I know what hardware is, but what hardware for what? For trading, for streaming. I've got a pretty decent PC. I've got 4 monitors. I got 2 34-inch ultra wide stacked on top of each other. Y'all see the top one. There's also the bottom one that I kind of use to manage my stream. And then I've got 2 other monitors. I'm probably about to upgrade to probably going to upgrade to like a ultra wide 49-inch. Tesla? Is that what's dragging the market up right now? Tesla up to 262.50. NASDAQ up to 17,111. Yeah, my advice to you is to trade very small in the beginning. Yeah, that's like the biggest mistake most traders make is they trade too large in the beginning. Like they're worried about looking cool on the internet a lot of the time. Not always. Instead of worried about protecting their account, trade small. If you're on a funded account program, trade small. Build up a cushion. Yeah, I heard about it. How in the world are stocks shooting up with micro volume? Because everybody's anticipating a Santa rally. And markets are close to lifetime highs, which a lot of the time acts like magnets. You know, like as the Dow, the S&P, the NASDAQ get close to lifetime highs, what happens psychologically? Everybody expects them to push up and break these highs, right? And so with that expectation comes trades based off of that expectation, which means buys coming in and thus pushing it up. Even if the volume is light, the traders that are here and that are trading, that's what they're doing. You know, is they're anticipating that Santa rally break and lifetime high break, and so you know, it's a self-fulfilling thing. People think a Santa rally is going to happen, so they buy it up, and those buys contribute to the Santa rally actually happening. It's self-fulfilling. Yeah, if your heart starts pounding, you're probably trading too large. One could argue stocks move faster. Yeah, I mean, bigger ranges potentially, you know. Yeah, again, we got this video premiering at 10 a.m. in 3 minutes. Fidelity is big unless you buy fractional shares. Yeah, there's a bunch of them that do. But Webull is just like Robinhood. I mean, they are good, but they both promote market makers. Yeah, they do payment for order flow. I mean, that's normal. All platforms almost do it. Like, very few companies don't do that. I can't even knock them for it. I've been day trading long enough to where, you know, I remember when it cost $15 a round trip for a day trade, and like that is not fun. It's not fun to pay $15 per trip. And so the payment for order flow, I'll let them take their 1 or 2 cents or whatever and pay less. Richmond index. I'm not sure. I haven't really been looking at the Richmond index. We did have something today. I don't think it was big. Yeah, we got the 5-year note auction later on that might influence things. I'll check it out. Yeah, I'll check it out. All right, guys, NASDAQ breaking highs again. Again, we're probably going to close it down. We got small green on the day so far. Again, we're going to be on Top Step TV at 11 o'clock Central Time, so noon market time today. And so, yeah, we'll be there today. And, yeah, we'll see you guys over there. We're going to go ahead and end this video now. And, again, guys, I'll see you guys over there. As soon as we close this stream, it's going to bring you to our sponsored video. Here is the sponsored video right here. So if it doesn't, for whatever reason, bring you there, there is the sponsored video right there on chat. It should be bringing you there right now. Let me make sure. Okay, so, yeah, the premiere is about to go live. And, again, I'm going to see you guys over there. Good luck, guys. Y'all be safe. And Again, I'm making sure this works. And again, don't go anywhere. There's the video right there in chat. I'm just making sure the redirect is going to work here, which it is. All right, guys. Yeah, I'll see you guys over there. Y'all be safe.